The annual rate of inflation remained steady at 2.3% last month as lower fuel and flight costs offset the fastest ride in food prices in 3 years. But consumers are feeling the pinch as retail sales for March fell for the third month in a row, down 1% on the same month last year. Well, that contributed to a decline in like-for-like sales of 0.7% during the first quarter, and that was the worst three-month figure since March 2011. British Retail Consortium Chief Executive Helen Dickinson said as pressure on prices continues to build, there is tighter squeeze on disposable income. I'm joined by the Economist Lena Komileva and retail expert Andrea Felsted, who is a columnist at Gladfly. Well, Lena, inflation was steady in March, but is that largely because of the timing of Easter? It came earlier last year. There are some big price rises in the offing.
Precisely, yes. Inflation saw a pause, not a peak, unfortunately. I think when we look at inflation figures, they're normally a lagging indicator of growth, a leading indicator of policy. So from the lens of the economy, it's about producer supply costs versus consumer strength. And on this score, at least, inflation has been very strong. We've had a rise of nearly half a percentage point over the last 2 quarters. And when you look at the domestic prices, so outside the cost-push inflation effects of sterling and imported prices, when you look at sort of things like consumer services inflation, that's cleared the Bank of England's 2% target over the last 2 months. And that, when we combine it with very low, cycle low unemployment rate, very strong unsecured credit growth, it shows an economy that's very close to full capacity. You look at the Bank of England balance, however, and there clearly the fact that inflation is running ahead of target, it's probably going to accelerate further in the months ahead, is going to cause some concern.
Well, that's right. I mean, April this month, we've had a big rise in council tax right across the country. Some water companies have put up their bills. I mean, at what point do you see CPI rising above 3%?
I think that is the likelihood, yes. Next month, we're probably going to see the echo of the stabilisation we saw this month because of the timing of Easter. As you say, the water rate hikes, the electricity utility announced hikes are going to come through, but also the effects of airfares. So we will see inflation accelerate rapidly towards 3% in the months ahead. We're certainly going to clear that, I think, by the end of this year.
So, Andrea, we've seen the biggest drop in consumer spending in 6 years in the first 3 months of the year. Is this the end of the consumer boom?
It does look like the consumer has taken a pause. February, March, they definitely slowed down. I think there is one wild card, and that's the weather. This lovely hot weather we've had, beginning of the season when all the new fashions are coming in, schools are on holiday, people will have taken some time off. That will, to some extent, counteract that effect.
Is there much evidence of increased footfall in the shops at the moment then?
Not at the moment, but it will come through. I mean, we all shop very differently to how we used to. We don't go out at the beginning of the season and buy a new summer wardrobe or a new winter wardrobe. When the sun shines, we want new clothes and we want them right now. And I think this will have a definitely an upward effect on demand.
What was really striking, though, about the inflation data today, this rise in food prices to which we referred just now. I mean, supermarkets have been cutting prices over the last few years, aggressive competition. Can they just not carry on doing that? Are their input costs too high? Are their margins completely shredded?
I think they will have to increase to some extent, and they will increase in areas where the consumer doesn't really notice it. The big worry is that too much inflation comes through and that drives consumers back to the German discounters, Aldi and Lidl. So it's a very delicate balance that they have to strike.
Interestingly, Aldi and Lidl they raised milk and bread prices towards the end of last year, and all of the big four basically rubbed their hands and said, fantastic.
That's a sort of a key price, sort of a product that consumers really notice the price of. Where they may not notice the price so much is in other products, and that's where the increases will come through.
And Lena, it's really interesting. Consumer services spending is holding up better than retail sales. Is this because we've reached peak stuff in the jargon?
Well, it is an indicator that things are probably not as they seem. I mean, you've got this sort of imbalance in the economy where inflation is built on a very firm foundation, because we see made at home inflation, basically service inflation, very strong, and then we have the pass-through effects of a weaker sterling pushing up, and of course imported food prices. And when you look at the producer price figures also out today, I mean, double-digit import inflation, that is going to work its way through the supply chain pipeline. When you look at the consumer, however, we've had remarkable strength, but this strength built on consumers running down savings, maxing out the credit cards. It can't last forever, particularly if prices are pushing down on disposable incomes.
So Mark Carney's said previously, the Governor of the Bank of England, that he's prepared to look through temporary inflation effects. But at what point does the bank start to get seriously worried that inflation is becoming baked in and they have to move on interest rates?
Yes, there's a sense that the Bank of England is looking at inflation as collateral damage. They're prepared to look through the short-term rise in inflation and likely steep overshoot, I think, as inflation tops 3% by the end of this year, because they're concerned about the fragility of the underlying growth in consumer spending, and they're worried that should anything change in consumer conditions, as price rises tend to erode purchasing power, tend to squeeze down on real wages, or should we see some volatility in Europe because of the forthcoming French elections or anything else that's coming through in the pipeline, that could knock down, that could create a steep fall in inflation. That's the last thing the Bank of England wants at a time when they've maxed out their tools. If interest rates are at record lows, their balance sheet is as strong as they could get it before inflation started rising. So this is a very difficult balance.
All right. What about the position of individual retailers then, Andrea? Who do you think is most vulnerable here to these kind of conditions?
I think the clothing retailers have been having a really difficult time. They should get some relief from the hot weather. The supermarkets are vulnerable. I think Sainsbury's is particularly vulnerable. They've just bought Argos.
Argos has been going quite well for them
It
now.
has been going quite well, but that's on the sales line. We don't know what's happening to the margin. The majority of the products will be imported. That's going to be quite a difficult situation. Tesco's got a lot riding on this trading period. They've got results tomorrow. They're trying to do this big merger with Booker, trying to convince investors. So they will really want their trade to be going in the right direction.
So a really very nervous time all in on the high street then.
Exactly.